Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading Corporation, and you are tuned into our podcast, The Secret War on Cash, where we take a kind of an in-depth look at some of the developments or changes that are taking place around us in our financial markets and our economy. Today, actually, we're going to be talking about what's been happening with gold, as our first article here from Watcher.guru talks about global gold reserves surge past the euro, and a 30-year record has been set. And I have with me my co-host, Chris Agelastos. He's here to talk with us today about that. And very interesting. I mean, you've got, Chris, now, the pecking order throughout the world in terms of, reserves, et cetera, was the U.S. dollar, the euro, and then gold. And we've been hearing a lot about central banks buying gold over the course of the last few years now, actually. And this is the extent it's happening, that they now, like we just talked about, how it's overtaken the euro in terms of positioning. And
Yep.
I think it speaks volumes to what's taking place around us right now with the tariff and trade war taking place, the uncertainty and volatility in the markets. We've got, BRICS rearing their ugly head. I mean, there is a ton of uncertainty, a ton of volatility and concern out there. And, bottom line is banks are opting for precious metals over fiat monies, and for good reason, because they're an unencumbered asset, meaning that they're not a form of a debt or a liability. It's an actual asset. And, one of the things in the article we'll get into here, I'll let you get into a little more, but it talks about how the tariffs are creating tremendous volatility in our marketplace. And when we talk about how gold just took over or went ahead, let's call it, of the euro, the international reserves are up 24% in Q1 of this year, up 24%. That is huge number. So tell us a little more about this. What does it all mean, and what might we expect to see as this continues, or if it continues?
Yeah, actually, I was happy to read this article, talking about the increase because, we've been talking for, at least the last year and a half or so now about all the central bank buying, right? Central banks have been buying gold and building up their reserves and, dumping the dollar, et cetera. Well, this actually shows it. It proves that enough gold has been amassed just in the last couple of years here to beat out the euro for the number 2 position, which is a big thing. And a lot of that obviously is what's going into these price projections of JP Morgan in this article mentioning $3,700 an ounce in the next couple months here by the fourth quarter of 2025, and hitting 4,000 by second quarter of 26. So all the data is showing exactly what they're stating here, and it does make sense that the tariffs obviously are going to have an effect. We know from our industry especially that anytime there is political instability and shifts in the world economy, people run to safety and security. And for thousands of years now, that has been gold. So it's all good, positive information here for our clients, obviously, and those of you out there getting into precious metals. I would say to look at the actions of these central banks and do what they're doing, not necessarily what they're saying, because they do still want you to believe in the paper currencies, whether it be the euro or the US dollar. But at the end of the day, what are they doing? They're putting their bet on gold.
Yeah. And well, look, this is exactly why, for those of you tuning in, gold prices have been basically skyrocketing over the last few years. And it's also why they're likely going to continue. In fact, in the article there, you'll see Morgan Stanley talking about a price point of 4,000 an ounce for gold, and that taking place in less than a year, as they put it, mid part of next year, and that, which is basically 9-10 months from now. So yeah, it is that trajectory has started, which is why, as we look at our second article here, Chris, that discusses or talks about what's going on with the actual price performance of gold. The bottom line is that, again, this trajectory has begun, and this, in fact, Mark Newton in this article, the article entitled out of the Daily Huddle here, Gold and Silver about to beeline to all-time highs, according to Fundstrat analyst Mark Newton. And he's looking at this happening in October, which you're talking, that's just a couple weeks away now for the most part. And, he cites such things as it's a seasonally, it's a good time to buy. Part of what he cites is he's doing so in anticipation of rate cuts. And again, it's all feeding into that's the one thing that's really interesting about what's happening with gold and silver and metals prices right now is, in a market, any market is going to be driven price wise up or down, depending on what supply and demand factors are. And that demand factor is a reflection of what investors see coming. But the beauty of metals is that you're catching demand from a variety of different sources, if you will. It's the central banks that are buying it. It's investors that are buying it. It's BRICS nations buying it. You get into the consumption aspect of it. In India, they use it as jewelry and so on and so forth. So as everybody does, but they're one of the biggest jewelry buyers. And that's where, these projections that are coming out, really, we've covered a lot of them in the last couple of years on our podcast. And none of them have been wrong because metals just continue to climb. And I think we're going to continue to see that. Yeah.
Well, he talks in this article specifically that he feels like we've hit a bit of a bottom in this, $3,300-$3,400 range, and that it's actually a very favorable entry point for people. So I know, people are always asking me, is now a good time to buy? Don't just take my word for it, right? Listen to these analysts. They're calling a bottom here and expecting 4,000 plus this coming year. That's a good amount of room to run. And I know, I always tell people too, look, don't just buy it. Don't buy it for the returns. Buy it for the safety and the security and knowing that you actually have something that has stood the test of time and that it will protect you. But it sure is nice as a side benefit to get really good returns out of it. And that's what we've seen here. So I don't expect that to change anytime soon. In fact, just in this article, in researching this and a couple of sources that they cited, they point out that Barron's, Goldman Sachs, JP Morgan, and Fidelity are all anticipating $4,000 plus gold this coming year. So again, this isn't just some a fringe person making some wild projection here. This is what our major global investment firms are calling for. And they're also, I'll add here, pointing out that silver has a lot of room to run. And as good as gold has done, and silver has done well also, they're saying here that if gold approaches the $5,000 mark, which I think we all agree it will, whether that's in 2026 or maybe pushes to 2027, but that's clearly the path we're on. They're projecting that silver could even stretch to $150 an ounce, which we're sitting just below $40 an ounce now. So there is a lot of room to get into this market if you've thought about it for the last several years or the last decade or even longer and just never pulled the trigger. Now is a great time to get in and at least get a little bit, whatever you can. Do what the banks and the investment companies and the central banks are doing, and protect yourself and at least dip a toe into this market.
That's right. And if you're not in the market, if you have questions about the market and you want to talk to Chris and I direct, actually, you can email us at podcast@swissamerica.com, podcast@swissamerica.com. Also, you can call us 1-800-289-2646. You can text us as well at that same number. Again, if you have questions, if you'd like some free information about what you can do to maybe learn more about gold or get better positioned in gold or just understand the market better, please feel free and contact us and visit us online as well at swissamerica.com. So I thank you for that, Chris. And for those of you tuning in, thank you as well. If you're not subscribed, please do so. And for those of you who are subscribed, nice to see you again. And we look forward to seeing you again real soon. Have a great rest of your day.
Yep. Take care.